You know how much you need to buy a house, and you know how much you need to prepare as your upfront fee depending on the price of the property you want to purchase. The next question is, will they even approve me? In this video, I'll be breaking down exactly what you need to qualify for a mortgage in Nigeria, the documents, income requirements, and what actually matters to these banks. Hello, my name is Aliyah and I am a mortgage banker. Let's get into it. Mortgage banks aren't just going to hand out a loan to you because you walked into their office. They need to know that you can afford to pay them back. And honestly, that's just good business because they also have external lenders providing the funding for these loans that they have to be accountable to. But the good news is, the requirements aren't as crazy as you may think. You don't need to be a millionaire, you just need to prove a few key things. And by the end of this video, you know exactly what those things are and whether you're ready to apply, or you know exactly what you need to work on first. Before we get into documents, let me explain what banks are actually looking for when you apply for a mortgage. They're asking themselves 3 questions. Can you afford the monthly repayments? They look at your income to make sure that you're not borrowing more than you can handle. Are you financially responsible? They'll check if you have existing loans, if you pay your bills on time, and how you manage your money. And number 3, is the property worth the loan amount? They'll value the property and make sure it's worth the amount of money you want to borrow from them. If you can prove those 3 things, you're actually halfway there. Now, let's talk about you proving them. The first thing banks want to see is proof of stable income. For salaried employees, this is the easiest category for you because your income is predictable. Here's what you need to show the mortgage banks. Number 1, you need to show them a 6-month pay slip from your place of work. Now, they use this to determine that your income is stable and that it also comes in at a specified range of amounts every month. Number 2, you need to present an employment letter that confirms that you work where you are and your position, your salary, and the length of your employment so far. Number 3, you need to present 12-month bank statements. This is just to show that your salary is getting paid when it is getting paid, and it is also coming into your bank account. And number 4, most mortgage banks might not require this, but the ones I know and the place I work at, we require you to present a letter of introduction from your human resources as where you work. Now, most banks want to see that your monthly income is at least 3 times your proposed mortgage payment. Now, what this means is that the DTI, which translates to debt to income ratio, standardized across the mortgage industry for Nigerian mortgage banks, is 33% of anybody's income. So if your monthly repayment is at 200k, that means your salary is at least 600k a month. For business owners and self-employed people, because yes, the mortgage opportunity is not only open to salary earners. This is a bit trickier because your income fluctuates, right? But it is possible. Here's what you need. You need to present a CAC or a business registration document to us. Now, instead of a 12-month bank statement, we will require, or rather, mortgage banks will require 36-month bank statements from you. They use this to check how much earnings you have been getting for 3 years, because instead of, you don't have a payslip and you don't have a fixed income for what you earn. So there's a calculation we're going to use your 36-month statement to do. We also need proof of your tax, and if you have an accountant, we need them to present this to verify your income, but this is not really a necessity most of the time. Banks will average out your income over several months to determine what you can afford, and then they'll look for consistency, not necessarily like huge amount of money coming into your bank account, but steady cash flow that proves that you can handle monthly repayments. The next category of documents you'll be needing to qualify for a mortgage include the following. Number 1, Personal identification. This is a valid ID, either your NIN, your international passport, your voter's card, or your driver's license. We also need passports from you to use on your account opening documents. Number 2 is proof of address, right? This can be presented with your utility bill, NEPA bill, or tenancy agreement with your landlord at the place you're currently residing. Number 3 is property document. This includes the title of the property you want to buy, survey plan, and building plan approval. That is if it has already been built. Though, this is important to note, most mortgages will only fund completed houses. They will not fund you to buy a land or fund you to build the house up. No, when they're giving you funds, they want to make sure that there is a property they can use as their collateral. And most of the time, it can only be a fully completed building. Don't worry, if you've not found a property yet, most banks will still process your approval so that when you finally find a house, the process will move way smoother. These are just the basic documents you need in the beginning. Other documents will be required later in the process, but I feel like for now, you don't have to worry about that. Now, number 3, the third thing that banks are going to check to make sure you qualify for a loan is your credit history. This includes existing loans if you have any. What will banks check? Banks in Nigeria are now part of the credit bureau system. They can see your existing loan, your repayment, and any defaults or late payments from your previous loans. If they do check this and you see that, and they see that you are a defaulter, then you are probably not going to get approved on the loan. But if you have any previous loan and you have been diligent in your repayment, then that's going to be proof of good character and they will fasten your loan approval process. If you currently have existing loans right now and you want to apply for a mortgage loan, here are the things I'll advise you to do. If you can afford to, please pay off your existing loan or at least reduce it a bit. And number 2, if you can afford to present a higher down payment on the property, this will reduce your loan amount and give you the ability to be able to receive a mortgage loan. You can also apply with your spouse, your brother. You can co-apply to own a building. That is something else that I feel is important for people to know. Now, something else that is very important when you're applying for loans is your age and your employment length. Now, most banks will require you to be at least 20 before you can apply for a mortgage loan. And even if you're 20, as long as you have a stable job that brings in monthly income, then you are eligible to apply. And since most repayment tenors cap at 20 years, they want to make sure that you have at least a couple of years left before you retire. This is if you are closer to retirement age. But if you're not, then this is necessarily not something you have to worry about. Each mortgage bank has their own requirement. And of course, once you begin the process, they'll tell you exactly what they need from you. Now, this is what the mortgage application will probably look like. There's a pre-qualification time. You submit all your documents, and then the banks will review them to see if you qualify. This will usually take between a week or 2. The second process will be property identification. When you find a property, the bank will send a valuer to confirm the property is worth what you're paying for it. Number 3, after they've confirmed that the property is worth the price, then they will ask you to ask for an offer letter from the property owner, and then you take that to the bank to show them that, okay, you have a property in consideration and this is the property you are loaning for. After that has been concluded, you have to sign a couple of internal documents and then also legal documentation. And once that is concluded, the next step will be disbursement. The bank releases your funds and you become a homeowner. If you are thinking, oh, I don't have most of these documents right now, then please start gathering them. Make a checklist, or you can send me an email and I'll send you the requirements you'll be needing. Don't wait until you are ready to apply before you start preparing. Get your tax clearance sorted out, request for your employment letter, or you should probably have it somewhere. Organize your bank statements. The more prepared you are, the faster your application will be. And if you don't qualify yet, then you now know what to work on. Maybe you need to increase your income, maybe you need to clear up some debts, or maybe you need to start saving for a bigger down payment. But at least right now, you know what to do. You have a clear roadmap and you're not guessing anymore. If you got to this point of the video, I want to thank you so much for watching. In the next video, I'm going to be talking about a fear I'm very sure most people have. What happens if I cannot pay my mortgage repayment somewhere in the future? And I'm talking specifically about you've gotten the loan, you've already started your repayments, but something happened, maybe a loss of job or something else that got in the way of your repayments. I'm very sure most people are scared about what's going to happen about that, and I'm going to be talking about that and soothing the fears you may have about it. So hit the subscribe button, and I'll see you in the next one. Bye.